Critical Man Pictures presents the 5-Minute Forex video training series, Support and Resistance. One of the most important concepts that you will learn is support and resistance. The essence of support is the area which buyers are willing to enter the market, not letting price fall any lower than a certain point. The essence of resistance is the area which sellers are willing to enter the market, not letting price rise above a certain point. Notice that for both support and resistance, I said area. That is because support and resistance are better defined as areas than exact prices, because just like with interpreting the data, most everyone seems to have their own idea on how you should measure support and resistance. Support and resistance can be described as the areas which buyers and sellers struggle for control. Many people struggle in the beginning with manually plotting support and resistance and want to rely on indicators to place it for them. But the point of support and resistance is to identify areas where there is a struggle for control of the price congestion, if you will. And because other traders are also looking at these levels, will give confirmation to the levels affecting how price moves when these levels are reached. Although you can use Fibonacci and pivot indicators to assist you in your plotting, when you are first starting learning to trade the Forex market, I would recommend plotting it by hand, as it will reduce your reliance on these indicators. Support and resistance are areas when buyers and sellers are grouped. Support means buyers and resistance means sellers. Support areas are always below the current price, and resistance areas are always above it. If you were to look at the diagram, as you can see, the pattern is heading in an overall up direction, a bull market. When the market moves up and then pulls back, the highest point reached before it pulled back is now resistance level. As the market continues up again, the lowest point reached before it started back up is now support level. In this way, resistance and support are continually formed as the market oscillates over time. The reverse is true for a downtrend. This is the constant struggle between buyers and sellers. If you were to notice the point where price stalled during the uptrend, which became resistance, but eventually price was able to break through it. Once the market reversed and started heading down, the old resistance level now became a support level. This is not uncommon in the Forex market and is a concept that you should be aware of in your trading. In this slide, you will see support and resistance levels plotted on a candlestick chart. You can see the pivots where more buyers or sellers enter the market, driving price in their desired direction or causing price to stall or experience congestion at certain levels. Some important figures have, as you will note, been highlighted with horizontal lines. These numbers, called psychological levels, are significant as traders look to them as points that will cause price to either stop and reverse at, or will have price surge through, continuing its trend. The more zeros the price level has, the greater the psychological level. An example of this would be on this slide. There is a line drawn at 1.3500. This would be considered a major psychological level, and earlier in the chart it was acting as resistance, but later on it began to act as support. Now if we change 1 0 and say price at 1.3550, that would be a minor psychological level. Oftentimes you will see a support or resistance level that appears broken, but soon after find out that the market was just testing it. With candlestick charts, which will be discussed in a later video, these tests of support and resistance can be verified by the represent candlestick upper and lower shadows. There is no definite answer to truly know if support or resistance is broken. Some will argue that support and resistance is broken if the market can actually close past that level. However, you will find that this is not always the case. Some interesting tidbits about support and resistance. When price passes through resistance, and that resistance could possibly become support, and vice versa. the price often tests a level of resistance or support without breaking it, the stronger the area of resistance or support is. When a support or resistance level breaks, the strength of the follow-through move depends on how strongly the broken support or resistance level had been holding in the past.